Right. Welcome everybody. Welcome to the second Colored Money live stream. Firstly, thanks to all those of you that actually watched the first one. We got quite a bit of support, and we really do appreciate it. Did a lot better than what we thought it would do. so, um, firstly, we've got an awesome topic today. We've got a few awesome guests. The one is really a guest. The other one is a guest that will be a regular. He missed last week's show due to other commitments. He's a very busy young man. Commitments. Let's say that. But as you can see, the two pretty faces over there, the two faces that are familiar is myself and Brandon. You saw us last week. The other two faces, those are the two young, pretty guys that are going to come and school us on what to do with money for 20 somethings, the young professionals. But yeah, like I said, awesome topic this week. We know that before I get into the name of the topic itself, last year, what COVID taught us, I mean, obviously it was a challenging time for everyone, right? It was a difficult time. We needed to manage our funds. It actually helped us to, and I think it created some sort of awareness for most people with regards to how to manage their funds, to be more aware of their funds, and I mean, to save a bit better and not to spend willy-nilly like we've done in the past, right? So with those funds that you've managed to save, I've had a lot of conversations with a few people that have saved some money and they want to invest their money now. They want to know where can they put their money, where can they grow their money, how can they preserve their wealth, and how can they grow their wealth as well. So that's essentially what today's topic is about. We are going to discuss what we think are good options for people how people can invest their money, where they can put their money in, and we know that it's going to take we know that for each person it's different. Everybody has their own risk appetite and their own different circumstances that they have to deal with. So I think how we'll tackle it is we'll have different scenarios. I'll get into the scenarios later, but I think for now, let's maybe introduce our guests. Brandon, maybe you could just elaborate if there's anything else that you think we're going to cover in the show, and maybe you could introduce one or two of guests. Maybe you could introduce Tom.
Cool, man. Awesome, guys. Thanks for tuning in. Yeah, man, I think what we're hoping to do at the end of this video is maybe give you like 5 principles or maybe 7 principles of what to do when we're looking to invest. Boobs mentioned one, which is your risk appetite. Being able to invest in your means, using your means, investing within your means. So I'm sure we'll cover a few topics, and I'm sure Tao and Shaq will be able to guide us on what the young millennials are busy doing with their money. But introduce Tao.
I'm a millennial as well.
Tao is an old friend of mine. We go back a long way. He is in the asset management industry, been there for a long time, one of the best portfolio managers around. So looking forward to what he has to tell us. Tal, you're a CA CFA?
CA, halfway CFA. So yeah, if I can take it from you, Brandon. I've been in the fund and portfolio management industry for close to 10 years now. CA by profession and qualification. Initially came out of University of Pretoria. Since doing articles, I've basically worked in the listed and unlisted or private equity space. I'm currently in the private equity space in one of the biggest fund managers on the continent. Prior to that, I was in the listed space in one of the biggest fund managers in the country. So yeah, I think the past 7 to 8 years have been in that industry, I guess, and it's been quite a keen industry for me. I think I wanted to do this since 2001. I think it was September 12th. It shouldn't have been September 11th. It was September 12th. The reaction to the World Trade Center, it's actually 2 days away now. So on the 12th of September, actually, I took a keen interest when I was watching the news, and I just saw like markets were tumbling, and I was like, what's going on here? Just because of a plane. And I've been keen on it since then. I guess here I am today, and I've got pretty big plans around the same industry and going even bigger on my own, or rather, yeah, basically going private. So that's the long-term strategy and vision. Yeah, so that's the long and short of it, of who I am and what I do.
Great, great. Thanks very much, Tal. Yeah, as you can see, everybody, we've got the right man with us today, the right man to tell us where to put our money, or at least give us his opinion, you know. But before we get into any detailed discussions, formalities out of the way. Please note, like I said last week, everything we say and discuss in this YouTube video is merely our financial opinion. It's not financial advice. You'll need to discuss. You need to have a chat with your registered financial advisor if you want to actually invest your money. Even though I don't necessarily always agree with what financial advisors say, but anyway, don't say that. Go ahead, Brandon.
We still haven't introduced our third host. He's in the corner there.
Yes, no, I'm getting to the third host. I'm getting to the host. So last week, I introduced you guys to my one handsome brother-in-law in Brandon, right? And now this week, I'm introducing you to my younger, the most handsome. Sorry, Brandon, no offense, but the most handsome brother-in-law that
Yes,
I have,
handsome.
you know. At least his mommy thinks so. Thinks that he's the most handsome. No, just kidding.
That's the one that counts, folks.
Of course, yes, of course. Shaq is my brother-in-law. He's an investment banker. He's 20-something, and he is moving up in the ranks. Oh, that's a terrible light. Sorry. He's definitely moving up in the ranks, doing very, very well in his career as well. Shaq, I don't know if you want to maybe give a bit of background on yourself and your experience of how you've approached investing so far. You're new in your career, and what your plans are moving forward as well.
Yeah, sure. Thanks, Books. Hi to everyone. I'm Shaquille Satin. Most people just call me Shaq. Investment banker for one of the South African banks. I've been there for about 4 years now. So very much still early in my career, not nearly as much experience as everyone else on the show today. Studied at the University of Cape Town, worked across about 3 or 4 desks within investment banking. Looked at FI trade, did a bit of structured trade and commodity finance, and now looking at leveraged finance kind of transactions now. So yeah, that's sort of my brief history, and I'm still very much starting my investment journey right now. I've only started looking at investing, just over a year. So yeah, I'm also looking to learn off today's discussions, and I'm really sort of excited to discuss this with everyone today.
Okay, awesome.
Boots, I don't know if you want me to maybe touch on sort of my journey and sort of the process I went through.
Yeah, go ahead, Shaq. Let's start with that then for now, and maybe when Shaq is done, we could have a look at a table of comparing certain asset classes and how they've performed over the last year or so since the COVID crash. So you go ahead, Shaq. Maybe run with it. Tell us what you feel like telling us.
Yeah, look, I studied finance and accounting, right? And I only started my investment journey about a year ago, right? And I had some really basic questions, which I asked myself before I actually started investing. The first question was, how do I actually practically invest, right? Which is kind of ironic because I spent 4 years learning finance, learning accounting. I knew how to value a share. I learned how to do discounted cash flow models, what impacts the share price. And then I graduated and I actually didn't know how to actually, practically buy a share. So that was sort of the
problem with most graduates, basically, right? I think that's the problem with most people that have just graduated. It's like they don't necessarily have the practical knowledge. So how do I actually go and put into practice what I've learned, right? They don't necessarily know how to invest themselves. Sorry, go ahead.
No, spot on, exactly. I knew the theory, but how do I actually go about doing it, right? But luckily, we live in the information age, so information is readily available, to us. So I spent some time, just really trying to understand how do I practically invest in various different asset classes. right? And because information is so readily available, I got there quite quickly, right? And now I figured out how to do it. Sort of the next, I suppose, obvious question I ask myself is, how much do I actually want to invest, right? And that speaks to Boob's and Brandon's earlier point on sort of risk appetite, right? And there's a number of factors, I suppose, which can influence what your risk appetite is. For me, the question I ask myself is sort of, do I have dependents? Do I have any existing debt obligations? And then sort of how far I am from retirement, right? So that was the three major factors I sort of took into account when, determining how much do I actually, want to invest. And once I sort of had clarity as to how I want to invest and then how much I want to invest, the next question was, okay, what do I actually invest in? And that sort of took a lot more of my time, really trying to understand, okay, what asset classes and what is there actually available to me as a millennial, very early in my career, just starting investing, what are the options available to me, and I'm sure we'll touch on a few of those options in today's discussions. But that's just very high level, the process I went through. And I think a lot of people, I know a lot of friends of mine, who had the exact same questions, and it's kind of obvious questions that you sort of need to ask before you actually start investing.
Yeah, no, agreed. I mean, there are definitely certain questions everybody needs to ask. I mean, whether you are someone with just 4 or 5 years experience in the workforce, or someone that's you're 35 years old and you've got a bond already, you need to ask yourself questions with regards to how much can you invest, what are you willing to invest, certain percentage. But I mean, that's stuff that we can't necessarily advise you on right now. If everybody has their own circumstances that they need to deal with. Excuse me. I think before we just get started. Yeah.
I think before we pull up that table that we want to show the viewers, Tal, maybe you can, being in the asset management industry, maybe you can give us a bit of thought or a bit of process as to what you see guys doing. I mean, are you seeing a lot of money going towards like unit trusts? Are you seeing a lot of guys not buying single shares but going into a unit trust at an asset manager, or what do you see? I mean, are they more inclined to the property market? I mean, what do you see happening? I mean, because you deal with a lot of stuff on a daily basis. So where's the money flowing?
So it at this very moment, I guess a lot of asset managers are very they're playing the waiting game to see where the world is going. I mean, there's a lot of things changing now coming out of COVID. Certain industries are thriving, certain industries are sort of like finding themselves in a position where they have to rebase and relook at themselves and how they are seeing the world. Everyone is thinking about the world beyond COVID. So what's happening a lot now, especially around pension funds and a lot of the conservative investors, is that they are now following, basically trying to keep track with the indexes that they are pursuing, and also going overweight a bit on certain industries which are basically resilient, especially the industries that were very resilient towards COVID are the very same industries that are seeing growth. So that's where a lot of money is going. I mean, in South Africa, it's very especially around telecoms. We've seen the need for fiber, for just having connectivity throughout the day, because now people are no longer seeing each other in person, but connecting over the internet and over the phone. So there's been a lot of keen interest into developing those kind of markets. And I mean, also even the big telcos in South Africa are very keen on expanding their own markets. So markets like that are where a lot of money is going overweight. But I mean, there's also other people who are looking at opportunities. And then there's also young people who are exploring new markets. I mean, we've seen the crypto wave, and I think it's still going, it's growing, and a lot of things are going to happen in that space too. So I mean, for young people, it's all about having the patience. Again, I think for me, when you've got the right patience and you invest long enough, you will see some great returns, especially if you're investing in the right type of investments with the right fundamentals. You'll see some great returns. So yeah.
Yeah, and I think you touched on a very important point there. You said, especially if you invest in in something that's showing that has the right fundamentals, the right returns. I mean, people. I mean, what we're seeing now with, I mean, your Robinhood apps, your Robinhood investors, your easy equities investors. People have access to investing. Uh, I mean, of the touch of their phone, basically, right? And they're investing in zombie companies. We're seeing a lot of overvalued shares, in my opinion. Companies that don't have real revenue, but their share price is skyrocketing because the retail investors are just investing without actually studying the companies or studying their potential investment, right? And I mean, they're making money because, I mean, if that's what the market is deciding, then that's what the market is deciding. But long term, that's dangerous, right? And you need to, that's where it comes back to what you said. Go with something that's got good fundamentals, something that you believe in. Don't just invest because you're chummy at the braai told you, hello bra, you look, I've just bought shares in, I mean, whatever company. I don't want to mention any company's names, but it turns out that it's a company that hasn't had revenue for the last 6 months, but they've still got shares listed on the exchange. So yeah, I think fundamentals play a key role. It boils down to know what you're investing in. Go and do some research. Don't just invest in something because you think you heard someone mention it in the conversation. I think what we could do now is maybe bring up that slide, please, John Michael, because I mean we are going on for quite a while already.
Brooks, before we jump into the slide, just on your comment on sort of fundamentals and stuff. I mean, this COVID situation we find ourselves in is sort of unprecedented, right? And no one really knows how all of this plays out, right? The light at the end of the tunnel, 1 year ago was the vaccine. Vaccines are now being rolled out, and now variants are sort of coming into play, right? So it's really difficult, and we see this in banking quite a lot. It's really difficult to form a firm view over the next 5 years, right? Because we just have no historic information to draw on from, right? So from a fundamental perspective, how do you actually go about thinking about the right asset to invest in if you don't actually understand how all of this plays out? I think that's something that I also took into account when considering what to invest in, right? It's like, what does the world look like a year from now, 2 years from now, 3 years from now? And based on my view, how do you actually pick an asset class? So
I mean, that's
just
a
a
great
comment
question.
on your fundamentals point.
Yeah, that's a great question. I mean, and I mean, maybe I could take a stab at this first, and then Brandon and Ty, you can throw your weight behind it if you want to. I think that the way that I tackled it is when you could see, basically look at all the companies that have done really well since COVID. They're your tech-based companies, right? People have their share prices have skyrocketed. People realize that the world we were being forced, so as to say, to move to the digital age, right? Your companies that took a knock were obviously your airliners, companies within the tourism industry, basically old companies that were sort of probably fighting the digital age as well. I think they probably took a bigger knock than others. But Brandon and Tal, please, you guys are the pros with this. This is just my opinion on certain things. I think that your tech companies, definitely looking at companies that are geared towards the digital age, have done well. That's what I looked at. And looking at asset classes like cryptocurrency, it's very what's the word I'm looking for? That's neither here nor there. There's a bit of risk, lots of risk associated with it. I'm pro blockchain, pro cryptocurrency. I think that it's on an upward trajectory, and that is why I decided to go with that. And I think that we're seeing with the younger investors, your millennials and younger people coming into the market right now, they are more understanding of tech, more knowledgeable of tech than your baby boomers, and that is why we're seeing those sort of asset classes start to do well. So I think my answer to that would be look at what you think is moving with the times and what asset class you think will has potential growth for the next 10 to 20 years. Gold, it's an old asset class, but it doesn't mean that it's dead. Gold is your safe haven. I mean, it could come down. It hasn't performed all too great over the last year, but I mean, that there's not too much volatility in gold. I mean, Brandon and Tao, I don't know if you wanna have a stab at that as well. Is that Shaq's statement?
Go for it, T.
Yeah, look, I mean, when I'm looking at this table right now, it sort of also speaks its own truth to say where is the world going, and how are people thinking now. I guess the only thing that is a bit, it's a red flag in a way. It's just how we speak. Like a traditional investor is long term in thinking, unless you're shorting markets and stocks. But a traditional investor has got a long term view, and it's got a long term understanding of the fundamentals. And whereas we've seen, especially coming out of how cryptocurrencies had a super boom, coming into lockdown up to date, although there's been some volatility, heavy volatility, but there's been booms. People have made a lot of money. So I guess when someone comes into that space, they're thinking like, okay, I need to also make 100%, 200% in the next 6 months or so. And, sometimes that doesn't materialize. So, I mean, with your GameStops, we've seen it also where people are now like looking for the quick buck, and it's also that it's been a space where a lot of people are investing, and a lot of people are making money off of a wave, and in most of those instances, there's not a lot of fundamentals that go in, and which is also why you find that traditional investors are also very anti or bearish towards these type of asset classes. So I think we'll probably have to also touch on that again to say where does the the long-term view come in, where does the fundamentals come in, and yeah, I'll
Yeah,
go for
agreed.
it, Bree.
I think, Bob, for me, if you look at that table there, right, it doesn't really tell the full picture. That gives you sort of like a high level summary as to what's transpired, right? So what that table there is showing you is you could be an old school investor and think that gold is going to be here for the rest of our lives because gold was there 200 years ago and gold was like the place to be. But what that table is telling me is that if you had invested in gold 10 years ago, you would have lost money, So the world is definitely changing, and it's changing rapidly. But I think also, we need to, when it comes to property, I'm a big advocate on cryptos, and I'm a big advocate on shares, but also on property. And I'll tell you why. That table doesn't tell you enough about buying a property. And I'm going to give you a scenario, I'm going to play it out for you, is you go now and you decide yourself, I want to go buy myself a flat in Satin or Bryanston. You're going to buy yourself a 1-bedroom or 2-bedroom, 1-bath place in Bryanston. It's a new development, so you're getting it at a decent price. The guy's asking 850,000 Rand. Fantastic, because it's a new development, there's no transfer duties. So you buy the place. You're getting an interest rate now, which is almost non-existent, so that helps your monthly cash flow. So a great time to buy property. But just remember, interest rates are going to go up. But in 2, 3, 4 years' time, right, your property is going to be worth more than what you paid for it 4 or 5 years ago. It might not be double your money, it might not be 15, 30% more, but it's going to be 10, maybe 12, 13% more, right? So what I'm saying here is, even if it was a property of R1 million, for example, you bought the place for R1 million, in 4 or 5 years' time, when you revalue that property and you get the bank to come and value it, and they increase it, they say, okay, now your property is worth 1.3 million or 1.2 million, you now have 200,000 Rand equity to play with, okay? So yes, you're going to take your bond up now to 1.2 million, okay? You're going to pay your monthly debit order or home loan payment on 1.2, not the one, but you've now got access to 200,000 Rand extra, okay, that capital, which you never had before. Now, I'm a big believer in doing this if you're going to do it for two reasons. Number one is you're going to use it for education, that 200,000 Rand, or the second one is making your house, putting renovations in your house to increase the value in your house, right? So anything that's got to do with using that equity that you've now put into that home for your personal growth, your investment, even into shares, you can put that into shares, into the crypto market, but essentially now you've turned that property of R1 million and it's now sitting at 1.2 million, and now you've got that access to that lump sum of 200,000. So there's also something you need to look at if you're looking at property. Property, it's not just about I bought the property for R1 million and in 5 or 20 years time, I've paid it off and I'm going to sell it for 2 million Rand. Like, that's great, the capital gain, that's fantastic, but there's a much better way to play it that gives you access to a lot more money, bigger lump sums, which you can use for, enhancing your education,
or investing into other revenue producing assets, right? I agree with you 100%. I've got a love-hate relationship with property. And it might come from the Robert Kiyosaki school of thought, where I think that a property is only really an asset if it's actually making you an income, right? If you're going to use it the way that Brandon mentioned, where you're gonna have it revalued on an occasional basis and try and get access to that additional equity, if it actually increased in value, then that's good. Then you're actually using it. You can use those funds and plug it into your education, because first and foremost, that's the biggest investment you can make, is to invest in yourself, right? And then to educate yourself with regards to finances and how to improve your income. But I just think that I believe that a property is an expense until the day you actually sell it, if you're not using it the way that Brandon just suggested. If you think about it, yes, it may be increasing in capital value, and you only see that return, you only see that benefit when you sell the property. And then for the time being, for that duration, let's say you lived in the house for 10 years. For that 10 years, you've been paying off a bond, you've been paying off insurance, you've been doing renovations, you've been doing the maintenance, you've been paying levies, levies if you're staying in a complex, you've been paying rates and water, everything else associated with that property is an expense, right? And you have not been generating any sort of income from that property. The day you sell it, fine, then you're going to get an income from it. So I personally don't. I mean, I've invested in property before, and I will invest in property again. But right now, I personally would not want to get into too much property. That's just my personal opinion.
Where would you put?
You want to say something?
Where would you put property or investing in property on this sort of risk spectrum? Where, the one end, I mean, you could arguably say, potentially cryptocurrencies is the high risk, and sort of government instruments on the other end. Where does property actually, where do you guys see it fitting in on that spectrum?
In my mind, it's low risk. It's sure you might say now, but COVID and house prices didn't grow. So I would have lost money, but you didn't really lose money because you still got the asset. So sure, if you had to sell the house now, you might not get the value, but you've still got the asset. It's still there. If you decide not to sell it, you still hold it. So for me, it's very low risk. And again, you can't. The way that I've explained how you would play property, right, is you still need the cash flow to pay the extra on the bond. You're not just getting 200,000 Rand and it's like mahala. It's you're paying extra on that 200K now, and it's 1.2 million the bond, not 1 million. But I just like that that flexibility because it's cheaper. It's cheaper for me to take out 200,000 Rand over 30 years versus now going to the bank to get a personal loan over 5 years, and they're going to charge me 18% interest. And I'm using that now to go and invest in unit trusts or cryptos or pay off a student loan. You know what I'm saying? So it all depends on where you're sitting. Now, I'm a big believer that you need to diversify your portfolio and your investments. And I think depending on your age and depending on your income per month, there needs to be a certain amount, a certain percentage that you allocate to extremely high risk investments. Okay, and I think a lot of people would see cryptos, which I don't think it's extremely high risk, but for the sake of this argument or debate, let's call them high risk, extremely high risk. You still need to be allocating money that you're putting away or saving or investing towards that, and then also towards property. But again, property is a big purchase. It's not a small purchase. You're not putting. You can go buy 75,000 Rand worth of cryptos. You're not really going to go buy 75,000 Rand worth of properties.
Yeah, no, that's true. And that 75,000 Rand in cryptos has the potential to skyrocket if you get into the right cryptos. But I mean, look, we'll definitely have a video where we see it, where we actually go into cryptocurrency and we'll discuss in detail certain aspects about cryptocurrency. But I mean, for today's video, we are just comparing on a high level certain asset classes. I think maybe we could just start with our scenarios, because I mean, we could end up talking about our opinions on certain things for a while. So I mean, let's for the sake of clarity for our viewers. Oh, and by the way, viewers, please hit the like button and subscribe as well. So I'm digressing a bit, but I need to get this in. Please smash the like button because it'll help the YouTube algorithm to spread the video across to other people that need to know this information or that would be interested in this information. Subscribe to the channel as well and hit the bell notification so that you know whenever we actually release or upload a new video. Sorry, I digressed.
Send comments.
Oh yeah, please send comments. Yeah, I forgot. Actually, comment on the video, and if we see the comments come up, we'll try and tackle whatever questions you have as well during the show. I mean, I'll leave Brandon and Shaq to do that because I don't want to do that. I mean, yeah.
And Shaq is currently in a relationship, so unfortunately.
Yeah, sorry, ladies.
I think Tom might be single.
There you go.
No.
We'll start a dating service on our channel as well.
His name isn't Tao for nothing. Tao the Lion Talani, Anyway.
No, Brandon. Things have changed.
Where was I? Oh yeah. So I think let's start with the scenarios. Scenario one. Let's look at it this way. You're a 25-year-old guy or lady, and you've just started working. You've got about 3 to 4 years experience. You've managed to save up. Let's be realistic. You managed to save about 50K. Let's say you managed to save 50,000 Rand over the last 4 years, and you are quite frugal. You don't necessarily live to the maximum of your means, meaning you don't live month to month. You have some money to save at the end of each month. Let's say you've got a 2,000 Rand at the end of each month that you want to invest every single month. Let's start off with you, Shaq. What would you do if you were this particular person? And I'm starting with you because I think it sort of applies to you in a certain way.
I almost exactly fit that mold, to be honest. Yeah. I mean, by mere fact that you're 25 years old, right? I'm assuming this person doesn't have dependents or any major sort of debt obligations, right? And by that fact, you sort of have a higher risk appetite, and you can sort of invest money in higher risk assets, right? I think it's also important to explain the relationship of risk and return because I think some viewers might not actually understand, what that relationship is. And it's it's a relationship where essentially the higher or the more risk you take, the more the potential returns you can earn. And also the downside is the more you can lose, right? And it goes both ways. So in that
Sorry to break
position,
your word. Sorry to break your word. So let's say you are 25 years old. You want to grow your wealth now. You've got this 50K. You want to grow your wealth. You're looking for the asset classes that is going to give you your best return over the next 5 to 10 years.
to be honest, I'm going all out. I'm going high risk, because I know that in a worst case scenario, I lose everything. I still have time to recover my losses, right? I don't have anyone dependent on me. I don't have any debt to pay down, so I'm willing to take that risk, right? So I'm I'm probably going cryptocurrencies. I'm probably looking at some commodities which I believe will appreciate in price, quite rapidly over the near term. So probably, I mean, probably 90% of whatever cash I have to dispose of will go towards, high risk assets, and 10% will sort of go to low risk assets, and I'll try to keep that for a rainy day.
So your high risk assets would be your cryptocurrencies, obviously certain
Yeah.
cryptocurrencies that you believe in. Bearing in mind that within the cryptocurrency market, there are higher risk assets versus lower
Yeah.
risk cryptocurrencies as well. But you obviously, like we said in the beginning of the show, do your research, right? Look at the fundamentals of each cryptocurrency as well. But anyway, and your low risk would be probably like REITs and like you said,
Yeah.
commodities and maybe gold.
Probably
That would be
gold.
your okay. Probably
Probably
gold.
gold,
Okay.
to be
Okay.
honest. But just to clarify, when I say, I'm putting cash in high risk assets, that doesn't mean I'm just putting it blindly, right? I'm doing the research, I'm doing the work, I'm trying to incorporate some sort of fundamentals. I'm looking at technical analysis. I need to, and this is sort of a principle I'll apply to any investment I make. I need to believe in it myself, right? I need to look at an investment, whether it be crypto, gold, shares, property, whatever it is. I need to convince myself, that
Yeah.
I truly believe in this investment, whether it's low risk or high risk. I will never put cash in anything unless I truly believe in it, right? So I just want to make that clear, not to just put, all your cash in an asset which someone said is high risk and you're hoping to get high returns, right? You
Yeah.
still need to do the work. You need to understand where your cash is going, right? It's your cash after all. You're putting on risk.
Yeah, and I think that boils down to the fact that, like we said, the biggest investment you can make is in yourself and in your education. I mean, in order to know what you're investing in, you need to educate yourself. And I mean, it's not that expensive. You don't need to go in. You don't need to go and put yourself through university. You can. I mean, everything is freely available online. If you take the time and the effort, and you actually go and research certain things, you'll come across some really good information as well. And I'm sure, I mean, you can pop certain
Brooks,
people a message.
I want to ask, I want to give Tyler that same scenario, but
Yeah.
but I've got a second question to that as well. Is we know a lot in the black communities, a lot of the guys invest in stock files because that's sort of be like how your mom and dad did it, your grandmother did it. So two part is one, what just the same answer to what Books asked Shaq, what do you think? And number two is, where do you see the stock files going? Is that still the place for a young black man, woman to invest in? Where's your sort of thought process on that, and where's the places to look now?
Sure. All right. Let me take the first question, and I'll follow up with the second question from Brandon. Firstly, I'd definitely put some money into crypto. I'd also spread it across, the different cryptocurrencies that are available, because there are those that are high risk or super high risk, and they have like super high potential. That could go to naught, but they could also go to like $4, for example, and it's like a high multiple. And then there's big cryptos which are fairly stable, although volatile, but fairly stable. So I definitely put a chunk of my uh, pot into cryptocurrencies, and I do that for one reason, because when you look back to different generations, and you realize that there was a generation of Bill Gates, Steve Jobs, and people had the opportunity to invest in that way. Some people caught it, some people didn't. There was a generation of Zuckerberg where social media was the wave, YouTube, etc. People invested, people didn't. And I feel that where we are now with crypto, it's sort of like the next wave and the next opportunity to create something big to the world. So I'd definitely invest in that. I'd also, just to be conservative and some solid fundamentals, would look into some small cap stocks in South Africa, because they also have some decent upside potential. Whereas, for example, if I'm buying a Capitec or a Naspers, or you're gonna get like 1,000 rand or plus a share, and it's quite expensive for someone who's just getting into the investing. So I'd look at small cap stocks with great upside potential. The one fundamental that I always think about, and we always apply also in our workplaces, is to say the African population is about 1.2, 1.3 billion, and it's projected to double in the next 20 to 25 years. So, I mean, all of those people need some sort of service, and you ask yourself, what are the needs, for people in 2030, for example, or in 2035? If I am 25 today, I need to be looking at that sort of horizon in terms of investing. So I'd look into that and look at small cap stocks, and invest into them personally. And I wouldn't go through the traditional unit trust, or going through the big asset managers who are going to charge some heavy fees. I'd try and do it myself, and I think that's where young people are going. With there's certain platforms that have come up now that give that opportunity. So I think that's where I'd probably put my money, and I'd just leave it and try and forget about it. I'll take dividend from crypto though every now and again, because it's so volatile. And then the second question from Brandon, I think you're quite right. I mean, the Black community believes in community, so that's why you have things like stokvels around, because there's power in numbers. So people, they generally do come together and pool funds. And traditionally, what has happened was that the funds would either be used for burials or celebrations, or they take the funds and at the end of every year then redistribute, either buy groceries and redistribute back. But I think there is that opportunity, there is that gap, because traditional stokvels are not used to returns. They're not necessarily keen on returns, they're just keen on accumulation, and they're missing the return part. And I feel like banks are making quite a good return on the back of that, because the guys are not necessarily looking at their returns, but they're looking at how their funds are accumulating. So to introduce the layer of return is quite a difficult one, because generally the population is not necessarily educated on these sort of things. So it also takes some convincing, actually, to get people to buy in, because traditionally, where people have promised returns, were people trying to scam. And then those are the news that go out, those are the stories that are out there about investment. So I think there is that element of return, which is a huge gap on the stokvel market. And I mean, there are people who are trying to explore it, and I think it will definitely also be something big for small fund managers. And I think it's also something I've recently ventured into, thanks to Brandon, who's connected me to people who are trying to unlock the return for the unbanked and the small communities. So I think, yeah, that's my thought on that, to say there is that element of return that is being missed, and will gradually be addressed as the population grows, because more and more people are educating themselves and are getting educated around the good that comes out of investing.
Yeah, awesome. Thanks for that. I think I just wanted to. So I might be digressing a bit, but I think we want to just take some questions from the comment section as well, from the viewers. We've got a question from Taz. She says, "Tao Boobs, what are your views on the hiccups El Salvador has had in introducing Bitcoin as a legal tender? Would Africa face a similar fate?" I'm not too sure if there were too many hiccups with regards to implementing Bitcoin as a legal tender. I know that it hasn't been an easy process. They've been quite good with regards to how they've implemented it. The problem that the market has seen is that Bitcoin has dropped significantly in value. There was a big drop in the market when they went live with the actual law, or passing of the law, where they made Bitcoin legal tender in El Salvador. And I mean, there are rumors around it. I mean, this is hearsay what I'm going to say now, but they are, from what some of the crypto influencers have said. No one knows for certain. But apparently, the IMF are the ones that caused the crash in the market. So that ended up shorting a lot of liquidating a lot of the people that the retail traders that have longed Bitcoin and thought it was going to go long. And that caused a knock-on effect and ended up shorting the entire dropping the entire market and dropping the price of Bitcoin. But with regards to that, I mean, it's a lot more detailed. Other altcoins did not necessarily perform as badly as Bitcoin, but I mean, that's a bit more technical. We get into the charts of things. But I hope that answers your question, Taz. I mean, Tav, I don't know if you maybe could elaborate if you know anything about that, or Shaq or Brandon, you maybe as well.
I think I kind of expected something like that. I mean, it's like a pilot project, so there will be teething issues, and there's obviously definitely pushback from traditional, finance and banking systems on cryptocurrency. So I think it's a great pilot project. There definitely will be other countries and companies that will take this sort of route. And I mean, at this point in time, we don't even need countries to do it. We just need companies to say, alternatively, you can use Bitcoin or any other cryptocurrency as an alternative payment method. And from there, it's just going to pick up. It's definitely going to pick up, especially if young people are getting into it and are taking a keen interest into cryptocurrency. Then young people are going to build companies. We are the future leaders in the world, so we will understand it better, we will implement it better. So it's that's why I'm saying, it's a long-term game, although it might not be that long, but it's a long-term game, and it's definitely a wave you don't want to miss for anyone. As I'm not saying go all in and put your house down and whatever, but you need that exposure, and you just need to also put your ear on the ground and learn, because opportunities are going to come up. It's not just about getting the return, but it's also about plugging those opportunities and gaps in that market.
Yeah, no, agreed 100%. And I mean, I think, as you mentioned, Africa, we are. I mean, what did they say? They're projecting the population to increase twofold over the next few years. I mean, Africa probably has the biggest potential for adopting cryptocurrency, more so than any other country, developed nation. So, Brandon, you go ahead. What did you want to say?
I just want to ask Shaq a question quickly. Shaq, why do you think the 30-year under, even 25 years and younger, sort of like 18 to 25, even 16 to 25 or so, like have bought into this whole crypto craze? I mean, you don't see the older guys jumping into it, but the younger guys, you see the younger guys and girls, like you get experts on shares, and every 18-year-old is an expert on cryptocurrencies. Like, why do you think? Like, where's the reason?
I think the main driver of that is, I mean, we grew up with technology, right? Especially sort of, I think my age group is probably on the cusp of millennials and sort of Gen Zs. And we grew up with technology, right? So we're really comfortable with technology and how it works. And we also not, I get a sense that we're not scared to try new things, right? We've seen how technology can change lives and how it can make life so much easier. So if there's a potential, for technology to make things easier, whether it makes payments easier or banking easier or whatever technology or problem is trying to solve, it's quite easy for us to at least give it a shot, right? And I think that's an attitude which young people have a lot more, because we're looking a lot further into the future, right? Because hopefully we live a lot longer than someone who's 70, 80 years old, right? Who only has maybe a 5 or 10-year horizon, right? So they don't really care, what the world's going to look like in 10 years time. Where someone who's in their 20s, we actually care what's going to happen and where the world is going, right? And I think it's a lot easier for us to, one, adopt new technologies, and also understand that value can be stored in digital form, right? And that's the big argument between sort of a Bitcoin and a gold, right? The gold bugs will say, no, but I can touch gold, I can feel gold, that's why it has value. Whereas it's not a weird concept for a millennial to think that that same value can exist in digital form, because we've spent so much of our lives on the internet, right? On social media, on our phones, on computers, on laptops. We're essentially born into this technological era. So it feels a lot more comfortable for us. And change is a lot easier for us to accept than someone that's not been exposed to technology all their life, and now suddenly you're asking them to invest in Bitcoin.
So then does your argument then, so does that make crypto safe? Because you're saying that you've got a longer time horizon, 50 years, you guys were brought up with technology. So does that mean that that people should not be as skeptical about crypto in terms of security? Is it a safe investment?
Look, if you mean safe by a less volatile investment, no, I think it's still very early, right? Tao mentioned earlier that it's very similar to when social media was coming up and the internet was coming up. There's going to be teething issues. There's going to be a lot of volatility in the markets because it's something that's new, right? So for now, I mean, does volatility mean it's a riskier asset? That's debatable. But if you understand sort of the technology and you understand what problem it's trying to solve, and you actually believe that it's solving that problem, I actually don't think crypto is a risky investment, right? Because when you look into the future, human beings will always tend over the long term to the more efficient technology, right? Over the short term, there will be volatility. People will say it's a scam. People will say it's risky, etc., etc. But over the long term, as a species, we will always tend towards a technology that's more efficient, right, and something that will make our lives better. So I don't think it's a risky investment over the long term, but I think over the next few years we're going to see a lot more volatility, right? Until more and more people start getting comfortable with the idea, right? And the more people are exposed to something, the more comfortable they become, and then the more they begin to understand what it actually is, right? And then we'll see the volatility reduce, and we'll see it as an established asset class where, when you mention, okay, I'm putting some cash into cryptos, it's not like oh geez, right? Like all the legacy financiers have this knee-jerk reaction when you say the word crypto. I think as time goes on, we'll see a lot less of that.
Yeah, no, look, I agree. I mean, obviously, as a pro crypto person, I think that the potential upswing of crypto is massive, and it's definitely a long-term hold. But like it boils down to what Tal said earlier as well. Patience is key. When you're an investor, the key is to be patient, to try and get in early, or as early as you can, as you think, or at the right time. I mean, I guess the argument of timing the market versus timing the market also comes into play. But with regards to crypto, we are still very early. It's an unregulated industry, so that in itself brings some risk. And I think that's why we see so much volatility. It's not regulated, and it's mostly retail driven, right? So it's driven mostly by your retail traders, people like you and me, that just go and buy on a crypto exchange. We trade with leverage. Okay, not that I trade with leverage, not anymore. But if you trade with leverage, you could lose your money, you could win your money. But in any case, that's what impacts the market so significantly. That's why we see such drastic swings downwards and upwards in crypto, right? But looking back at that table that we shared earlier on, Bitcoin has been the best performing asset over the last year, right? Even though within that, I think it was up 200%. I can't remember, but if it was up 200% over the last year, within that 200%, there were times where it was actually down 50, 60% within that 1 year period. So if you are someone that's day trading, you are going to get knocked and lose your money quite often if you're trading cryptocurrency, day trading. But if you're someone that just buys and holds the asset with the hope of it increasing and appreciating in value, it will appreciate in value, right? It's not financial advice. It's my belief that it will appreciate in value over the next 2, 3, 4, 5 years. That's just Bitcoin. There's many other cryptocurrencies as well. But I think just to move before we move on, my personal opinion, if you want to get into getting early into something, cryptocurrency is definitely a good option to look at for me as an investor, as a potential new investor. If I was a 25-year-old, my answer to that question, I have one answer. I would invest everything into cryptocurrency. Obviously, I'm biased. I'm not subjective. I don't think it would be risky at all to invest everything into cryptocurrency. I wouldn't put in. I mean, I put some money into gold before, but if I was a 25-year-old, I wouldn't put anything into gold. I wouldn't put anything into equities right now. I actually think the equities market is overvalued. I think the S&P 500 and the JSE are at all-time highs, and so is the crypto market. But I mean, if you're someone that's going to, you're not a smart investor, you're just going to look at investing in an index. I wouldn't invest in an index right now. I mean,
Bugs, what about diversification?
Screw diversification. I will diversify within the crypto market. That's my diversification. That's my diversification. Not financial advice, right? I mean, this is what I am. I'm a hustler. I'm not an economist, right, or a financial advisor. But anyway, that's my answer to being a 25-year-old Braden. I don't know. Maybe we're running over a bit, but I mean, maybe just 2 minutes. What's your answer for a 25-year-old? If you were 25 years old now, what would you do with your 50K and your 2001?
Study. Get some more degrees under the belt, or and not even just your normal degrees. I would look at the stuff that's got to do with technology, that's got to do with artificial intelligence, data science. That's what I would invest in myself for a little bit, and then from there I would do cryptos. I would do shares. I don't think the share market's overvalued, and the reason that I don't think they're overvalued is because as long as the central banks keep throwing money at the problems, there's going to be enough liquidity and enough money in the system. It's not going to be our problem.
But do you think it's overvalued compared to the cryptocurrency market? I think that was my point. I agree. All asset classes are going to inflate over time now because of the money that's being printed. But in my personal opinion, if I was a 25-year-old, I had to choose between the equities market and not that you have to choose, I guess, and the cryptocurrency market. I would probably lean towards the cryptocurrency market. Obviously, my risk appetite is probably higher than most. But yeah.
I agree with you. I think the cryptocurrency market is highly undervalued, and it'll be highly undervalued in 5 years' time. Still, it'll still be undervalued. So whereas the equities market has been it's been overvalued since 2010. It's been overvalued. So there's huge opportunities. Cryptos is like that once in a lifetime opportunity that comes around. You had the Rockefellers who built America, then you had the Zuckerbergs and the Amazons and the Apples, and now you've got cryptos. So I've said a lot. I've said to our asset management clients, like we've been pushing them and doing consulting and saying to the guys that you've got to start looking at the crypto market. you can't be left behind. I mean,
Yeah.
if you look in America, JP Morgan, Goldman Sachs, Morgan Stanley, UBS, all these guys, all the big banks are getting some form of exposure to the cryptocurrency market. I mean, even JP Morgan, who was so anti it, are pumping billions now into it. Not saying that they're buying cryptos, but they're investing in technology that's going to allow their clients to start investing into cryptos and things like that. So, yeah, I absolutely agree with you. I think if cryptos versus equities, definitely cryptos.
Cool. Okay, then I think we're gonna have to be very quick before with the other two scenarios. Second scenario, let's try and do it within a minute each. You're a 35-year-old female, you're married, you've got a bond, you've got 2 kids, you've got 150,000 rand. You also have about a 4,000 rand every single month that you want to put away. You want a dollar cost average. What do you do with your 150,000 rand, and what do you think you contribute towards every single month? I think you guys all know what my answer is going to be, so I'll just leave it to the three of you to give your answers for this.
Diversify.
I mean, Brandon, you go first. Sorry, Shaq. Brandon, you go first on this one.
I already win. That's my answer.
Shaq's right, definitely diversify. I think at 35, I would still put the majority of, I'd look to put the majority of my money into cryptos because, again, like I've said, I still think they're highly undervalued. Even if you came to me for financial advice, I would say to you, which I can give, I would say more cryptos, less equities. But then also I would say start looking at property. I would say you need to start looking at, even if it's about to rent, you go buy yourself a 200,000 rand property, you rent it out, for 2,000 rand a month or 3,000 rand a month, try to get that yield. So you're building assets. I think at the age of 35, you need to start building assets.
Yeah, agreed.
You can't just be sort of trying to win the lottery. Like I think Shaq Dean said earlier, it's like everyone's just trying to find this one horse that's just going to make you billions. If you've got that mindset, you're going to lose all your money. So the mindset should be, you've got to be patient, and we've mentioned that earlier, you have to be patient. You've got to be looking to build. You have to start acquiring assets. And when I say acquiring assets, I'm not talking cars. Acquiring assets is building your crypto account, is building your stock market account, is building your house, your housing. That to me is what you have to start looking at 35. It's not I'm not saying you don't have time. There's always time. I was retrenched twice. We lost a lot of money, and you just rebuilt again. But we're young enough to do that still. But again, I think if I could go back to the age of 30, 31, I would have then, we didn't have cryptos when I was 31, 30, but I think then I would have started with property and putting money away into property because it's a long-term asset. It's not going to depreciate. It doesn't matter. I've yet to see a housing market around the world that has depreciated over time. But now that you've got cryptos, those are the two asset classes I would look at.
Yeah, no, I agree. I think, and would you not advise someone then? I mean, this person, for example, has a bond as well. I mean, now that interest rates are so low, would you not advise them to put a little bit extra into their bond, take advantage of the low interest rates as well, reduce their bond and get it down to as low as possible for when these interest rates do go up again as well? Just touching on the video that we had last week as well, we said that with inflation, it's only a matter of time before interest rates do go up again. So I agree. Put some into crypto, maybe put a little bit into equities because it is a bit more stable. And I would personally maybe just pay off a little bit of my long-term, of my big debt as well, now that interest rates are low as well. But stay away from a car. Don't. I know some of us have bought cars recently, but
again,
if you can.
I think to myself, and I hear what you say about paying down your bond, and you're 100% right. But for me, it's about what do you do with the extra cash every month? Are you using it to go and spend it on takeaways and partying and drinking and clothes and shoes, then I would say that you're wasting your money. You want to put that money into your bond and pay down your bond, right? If that's what you're doing. But if you're dealing with excess, if you're actually buying shares or buying cryptos, then I'm like, leave your bond because the money's cheap. Again, for me, it's like, if the more I can use the bank's money, the better. Like that's my philosophy. Whether it be cars, I will never put a deposit down when buying a car, ever. It's the biggest waste of money, in my opinion.
I agree with you 100%.
Even a house, like I would be like, okay, cool, you put down the deposit, that's fine, but you're still paying the house over 30 years. It's still going to cost you as cheap as anything else. I could take that 10% deposit and go buy cryptos or go buy shares or even go buy another property to rent out. So it just depends on what you're using that extra money for on a monthly basis. If you're wasting it, then put it into a bond. If you're using it to invest in other things, go for it.
Yeah. I think, sorry guys, I think we're running over an hour already, and I think we probably need to start wrapping up. So I know we said we're going to do 3 scenarios. The final scenario we said we wanted to have was a 55-year-old person nearing retirement. I think I can just answer that. When you're at that age, you need to look at securing your funds, playing it safer. You don't want to probably get into cryptos, even though I would say probably have a little bit of exposure to cryptos. You probably want to play it as safe as you can. Tal, maybe you could just give a little bit of a quick answer on that. If you're a 55-year-old person, what would you do with your money right now?
If I'm still employed for another 5 to 10 years, I'd definitely eliminate any sort of long-term debt. I think that that would definitely, if I'm 55, hopefully by then you've paid off your bond or you're not paying off a house. But if you are, then just close it out very quickly so that it's just going to make your retirement so much easier. So I'd definitely put out any sort of long-term debt, and if that is out, then I'd probably look at how to get my money to work for me in retirement. So you will definitely need to get exposure to cryptos, although obviously you'll probably be underweight versus a 35 or 25-year-old. And also just look at some companies with some decent dividend yields who pay some dividends and make some money into your retirement.
Cool. Awesome. Thanks for that, Tal. I think we need to wrap up now. Maybe we could just touch on maybe like 4 key aspects of what you need to do if you're a newbie investor. I think the first thing is, I think we all touched on, was invest in yourself. Educate yourself. That's the number one aspect, and you don't necessarily need to spend too much money to invest in yourself. The information is freely available on the internet. It's all about putting in the hours, putting in the time, doing the research, right? You don't need a degree to invest in yourself. I mean, there are Udemy courses that you could pay $100 for that could teach you quite a bit. Second thing is time, right? So it's like Warren Buffett says, the markets are a tool for transferring wealth from the impatient to the patient, right? So don't try and trade too much. Buy something. If you think it's good, you believe in it, hold it and stick with it. Over time, 5 years is not a long time. And in 5 years, for example, if you buy crypto now, not financial advice, if you buy crypto now, you hold it for 5 years, depending on how much you put in, it's definitely going to be worth more than what you put in. That's without a doubt, it's going to be worth more than what you put in. 3, this is my opinion again, don't live to the maximum of your means. You need money to invest. And if you are someone that's living month to month, then your lifestyle, you can't afford your lifestyle right now. Right? And then you need to take a look at your budget, look at your expenses. Firstly, if you don't know what your expenses are right now, your monthly expenses are right now, then you're in trouble. You need to look at your bank statement, look at your expenses, try and see, okay, fine, do I really need to spend $5,000 a month on partying and drinking and smoking? Maybe not. And not that I'm giving you financial advice, but just look at where you can cut costs and then use some of that money to invest and dollar cost average into something.
There's a lot of
points that I gave.
A lot of 20-year-olds will disagree with you on that point.
They need to agree with you. Shaq, you probably agree with me though, right?
Debatable.
Come on, Shaq. Come on. Anyway, those are 3 points. I'm gonna leave the other 2 points to you, Brandon, Shaq, and Tal. I can't go
I
over
think
2
if I could just add just 1 point, I'd say cut out all the noise, cut out what we say, cut out what financial advisors say, and do what you actually feel comfortable with, right? Because we like to overanalyze things and we like to get all this information, which is good, right? You need to understand what you're investing in. But the last sort of checkpoint that you need to cross over before you actually invest is you need to be comfortable, right? You shouldn't be having sleepless nights because you invested in a particular asset, right? You should actually be completely comfortable with putting your money into whatever asset you decide on, whatever you believe in. I think that's a really, really important thing for any investor, right? You just need to be comfortable and confident in where you're putting your money, cutting out all the noise.
Awesome. So,
I think for me, it's to say your risk is part of the game. So I know a lot of people when they're new to investing, they're like, I don't feel, you always feel uneasy about investing at a certain point. So risk is part of the game, and you just have to familiarize yourself with that feeling. You'll never get a great goosebump feeling about investing anyway. So ride with the risk and just make sure that you understand your risk to a certain extent, because there is that risk that you won't understand or that's going to come at you sideways. So
yeah, awesome. Brandon, you want to add anything to that?
Just get in the game. Be a participator.
100%. Stop watching the race. Stop watching others run the race. Get over that fence and start running yourself. 100%. That's a good point, actually, Brandon. Okay, cool. So, maybe one last thing to share with this, guys. Kadisha Mabua asked the question: any thoughts on ETF? Tal, quick answer. What do you think?
sell them and buy crypto.
Spotted. I love it. Let's end off there. Thanks very much, Tal. Thanks for joining us. Hopefully we could get you to come on again. I really enjoyed having this chat with you and with the other guys. Thanks, Shaq. Shaq will be a regular when he has the time to spare. He's a very, very busy young man. Brandon, as always, thanks. It was really good. I really enjoyed it. Please, everyone, just remember, not financial advice. It's merely our financial opinion. Go and chat to an actual registered financial advisor. Brandon and Tal are registered financial advisors, but what we say here is still our own opinions. It doesn't necessarily represent the opinions of the companies we work for or the businesses that we own. Yeah, that's it. I think tune in next week. Like, subscribe, smash the bell notification button so that you actually get notified of when we load a new video. Thanks very much.
Cool, guys.
Bye-bye.
Cheers.
Thanks, everyone.